Okay, we got the inflation numbers out. The market was expecting 3.1%. We got 3%. Here are the responses of the market. The Dixie, you can see that big red candle down. Let's just go on to the hourly because it just makes it look a lot more dramatic. That's the hourly candle on the Dixie. Then we go into the NASDAQ, the QQQ. You can see it's up just before pre-market. It's up slightly. Then we go to Bitcoin, which initially had a spike, putting it over the 200 SMA, but then again, just dropping to under the 200 SMA. Now, a lot of people are asking, is there going to be a rally? Because now we're getting ever so close to the rate cuts. That's what we're going to be talking about today. Is everything going to change today after the rate cuts, or is it just going to be more sideways choppy movement for Bitcoin? Guess what? I think I have the answers. I'll tell you just after this. You know what I love more than anything? More than anything, I love winning a bet. I took my researchers a bet today. We played the overs and unders, and we said, okay, if the CPI comes in above 3.1, at 3.1 or below 3.1, I said that if we go under 3.1, which is where we came in at 3%, I said Bitcoin would touch $60,000. If you look at the Bitcoin price and you look at exactly where it touched, 59,648. So I think I was very, very, very close. You can see this on my Twitter. I published this on my Twitter, but it shows what the overs and unders were. I guess there's still 24 hours to go until after the CPI, but I guess so far, so good. So we are on CPI day today. And we've got a big show for you on CPI day today because everyone was expecting the market to run. Is the market still going to run? Is it not going to run? Is there just never going to be another run? Where are we with the markets? That's what we're going to be talking about today. Also, I'm going to show you what the institutions are talking about and what the institutions are doing. So yeah, lots to do today. Remember, if you're not already subscribed, you know what to do. Subscribe to this channel. And if you are subscribed and if you're here right now, smash the like button. Go crazy, crazy, crazy on the like button. Yesterday, 2,000 likes. Today, we're going to get 2,500 likes. I'm almost sure of it. I'm almost sure of it. All right, let's get into the alpha, the meat and potatoes of today's show, the alpha. So what happened? We had the CPI numbers come out. The market was expecting 3.1%. We got 3%. And that's, extremely bullish. That's extremely bullish. Because why is it extremely bullish? Because Powell said that if the CPI numbers can go down towards 2%, or they could show that they are in the direction of 2%, he would be more amenable to cutting rates. As you can see, the recent peak of CPI was 3.5%. Then in May, we got a reading of 3.4%. Then in June, we got a reading of 3.3%. And now we're down to 3%, which shows that the CPI is coming down at an accelerating rate. And as a result of that, the market started to celebrate. Specifically, the markets that started to celebrate were the Dixie. Just look at what happened to the Dixie. Look at that 1 hour candle on the Dixie. You had the QQQ or the NASDAQ edging up ever so slightly. And then, of course, you had Bitcoin edging up ever so slightly. It went up to 59,600. Right now, it's over the 200 EMA, but it's not over the 200 SMA. And now remember, the bull market line, the simple bull market line, is the 200 simple moving average, which is this yellow line over here. And you could basically say we're just tickling. We're tickling that line. We're not in there yet. The tip's not in, but we're just tickling that line, and we're about to go right through that line. So right now we are at a battle with this with the SMA. And when I saw this happening, and I said, look, I want to take a view, and I want to take a view on the CPI numbers, right? I want to take a view on the CPI numbers. What I did was, instead of actually opening leverage on my leverage account, I went to BitFunded, and remember, I purchased that $10,000 starter pack on bitfunded.com. And so right now, I'm in a challenge, right? So you can see that in the challenge, I'm up $437 at the moment, right? I'm up $437 in the moment. To pass this challenge, I've got to make $1,000 on a $10,000 account because I bought the $10,000 starter pack. I've got to get 8% on the first one, and I've got to get 5% on the second one. Then I'm trading with other people's money. So that's what BitFunded is all about. You basically, you don't wreck your own portfolio. You pay $100 or $229 or $329. You then trade play money, not real money, for 2 trades. If you get over 8% on the first one and over 5% on the second one, then you are trading with other people's money. So right now I'm in the middle of a trade. I guess when later on in the show, if this goes up and we can get up to $600 profit, that'll be my first test actually done. If you guys want to do this, just go to bitfunded.com and sign up. I think it's better than wrecking your own portfolios. The most you can lose is what you put in, like $100 or $229, and you actually end up playing with other people's money. So that's what I'm doing right now. As I said, I'm doing that because I think that what's going to happen is we're going to attack this 200 SMA. We're going to go back into the territory of the 200 SMA. And then I think what we want to do is we want to just move into this, back into the old range that we were in. And that'll take us almost back to safety. Now, as 𝗥𝗢𝗪 says, look, in bull markets, it is quite common to break below the bull market support band, specifically on the daily. So on the weekly, if you look at it on a weekly point of view, which is actually the time frame that you should be looking at. If you look at the weekly, just look how far we are below above the weekly 200 MA and the weekly 200 SMA. But on the daily, because I know we're degens and we like the shorter time frames, on the daily, we just need to break up. So look, I'm not too panicked about it. I think we're going to break into the range. I think what's more important is that all the selling that's actually happening, the German government and whatever else, that's just being bought up by the ETFs. And you can see, if you look at the ETF chart, they've accumulated 13,810 Bitcoins worth just under $1 billion in the last 4 trading days. So what you can see is that the FUD of the US government and the Mt. Gox FUD now seem to be kind of out of the market. And the ETF seem to be buying them up. And the market's kind of pricing in the fact that, you know what, there's going to be a bit more selling. Germany's almost out of coins. They don't even have $1 billion worth of coins left. And the ETFs are just buying them up. And as I said, I said this the other day, and I think that this sentiment is being picked up by a few people now. But he says, while painful in the short term, the distribution of Mt. Gox reserves and government sales removes the annoying supply overhang, helping distribute coins to a wider array of holders, thereby growing the network and leaving Bitcoin healthier. And that's what people are starting to see. People are starting to see that this distribution is actually healthier in the long term for Bitcoin because it makes the network stronger, because it makes the holders of the Bitcoin people that we want in the market, removing people that we don't want in the market. Guys, can we put on the aircon here? Make it like nice and cool, because I'm dying. Maybe it's because I'm wearing a sweater. Also, another theory which I heard today. Now, I'm not really sure if it's a big theory or not, but number one, the RSIs. So Steve Courtney from Crypto Career University, he says, look, there has been a fake out in the RSIs, but the fake out is usually temporary, and the RSIs will turn up and we will push Bitcoin straight back up. That's the first thing. The second thing that I heard today, which I think is quite interesting, I'm not sure if I've thought about it enough to actually give an opinion here, but what I heard is that a lot of people are speculating that some of the holders that are going to get Bitcoin from Mt. Gox are going to sell the Bitcoin that they get from Mt. Gox, and they're going to use that money to buy altcoins. So yes, that will bring down the price of Bitcoin, but what is that going to do to the altcoin market and to the Bitcoin dominance market? And that's it's a theory that I've got to think about. What percentage of Bitcoin will be sold and moved into ETH or other altcoins? Because remember, these guys who were in Mt. Gox, they've been in since 2014. They may have been looking at this and going, look, we've actually become altcoin degens. So it's something that I've got to think about. I'm not 100% sold on the fact that that's the catalyst that we need to get the alts down, but definitely something to think about, right? All right, let's take a quick deep look into the CPI numbers. So CPI numbers came out 3% instead of the 3.1%. Core CPI fell to 3.3 instead of the expectation of 3.4. You've got 39 consecutive months of inflation at or above 3%. 3 straight months with declining inflation, which is good. We are declining at an increasing rate, which is also good. The DXY responded well. The QQQ responded well, which is the NASDAQ, responded pretty well. Bitcoin responded, but not very well. A lot of people were expecting Bitcoin to respond very, very well. I was pretty sure that Bitcoin wouldn't respond, and even that was a bit of a generous one for me. Why? Because I know the correlation between Bitcoin and TradFi is now at an all-time low. And I know that this is good for TradFi, but I don't think that this is as good for Bitcoin because the correlation between TradFi and Bitcoin is at an all-time low. Now, you can see the correlation here. This is the move. This is the last time that we were actually correlated, and this is the move since. And now eventually what's going to happen is these two lines have to close, because in the long term, what we do know is that the correlation actually tends to stay closer to 1 or moves back towards 1 between the stock markets and between TradFi and Bitcoin. All right, so now that the markets have seen the results, let's see how they are pricing in rate cuts. there's an 81.3% chance of a rate cut in September. That's what the markets are actually telling you. 81.3% chance of rate cuts in September. I think it's right. I think we will get one rate cut this year. I don't know if we're going to get two. In fact, I'm almost willing to put my money on the fact that we don't get two rate cuts this year. We get one rate cut. And so for now, what we're getting is we're getting stock markets celebrating, and a lot of people are basically calling for a stock market decline. A lot of people are calling for a stock market crash. And I was thinking about these people that are calling for the stock market crash, and I think here's the way that I see it, right? I know that every time the markets are in a bear market, there are people calling the market up. And they call it up, and they call it up, and they call it up, and eventually they get right. And the same thing when the markets are going up. So you're getting these markets that are going up into like record territory. And every time they break another record, more and more people are calling for the markets to go down. And the reason I do that is because it's actually a very simple formula, right? And I tweeted about this formula. I said, look, in a market that's going up, just call it down. Eventually, you'll be right. In a market that's going down, just call it up. Eventually, you'll be right. But you've got to ask yourself, these people that have been calling the market down, when have they been calling the market down since? Because a lot of these people that have been calling the market down were calling the market down in April. And they were calling the market down in May. And they were calling the market down in June. And if you would have listened to them, you would have missed out 20% of the returns. So the way I see it is it's quite simple, right? When the music's on, we dance. Right now, the music's on. Right now, the TradFi music is on. We've got to dance with TradFi. That's what the market's about. It's pointless sitting here and going, there's going to be a correction, there's going to be a correction, there's going to be a correction. Ride the wave, ride the trend until the trend breaks. When the trend breaks, exit. As we always say here, Carl's a big proponent that says, the trend is your friend until the end of the trend. Right now, you can keep calling the stock market down. And I hear you, yes, you're probably right. Because in a market where the market's gone up 40% or 50% in a bull market, here it is. This is really measure the numbers here. 47%. In a market that's gone up 47%, you will get a correction. Eventually, the bears will be right. Question is, when does this correction happen? Does it happen near the top? Does it happen after we go up another 10%, 20%, 30%? Rather, take a trend line, draw a simple trend line over here. Like, oh no, that's a fib line. We don't want a fib line. We want a trend line. Let's quickly get us a trend line over here. Let's just make sure. Trend line, perfect. Just draw a trend line from the bottom of the trend all the way up and keep riding the trend. And as we say, the trend is your friend until the end of the trend. And so you want the oh, come on. Okay. So you want the NASDAQ to break, but it's going to oscillate. Wait for the downtrend. And then if you want to get out, you can actually get out. Because for now, as I say, the markets are pumping, the music is on. And I don't know about you, but when I go to a party, right, I don't arrive at the party 10 p.m., start dancing, and then keep saying, guys, at 2 o'clock, the music's going to switch off. At 2 o'clock, the music's going to switch off. At 2 o'clock, the music's going to switch off. I get there. I dance. I drink. I dance, you know? And then, like at 5 to 2, when you know, they start turning the music down and the trend is broken, then I say to myself, okay, it's time to maybe go home. It's the end of the party. It's the trend. The trend is broken. This party used to be a good party. Now everyone's drunk. And all the people who used to be a 2 now look like an 8 because you've got to get beer goggles on. So that's the time when you want to leave the party. I like this tweet. It said, it's rare, but the SPX gained nearly 17% in the first 130 days of 2024. When up 15% and 20% year to date in post-World War II era, SPX average gain for the rest of the year is 8%, with only one negative return in 1983. It's exactly what we're saying. When the trend is up, then we ride the trend. We don't sit there and say, look, the music's going to switch off. The music's going to switch off. The music's going to switch off. Who gives a shit? Dance. The music's on. We had to dance. We had to be part of the party. And right now, TradFi is having a party. Crypto having a party with no alcohol. It's like one of those like subdued parties. But TradFi is having a party right now, and we've got to dance while TradFi is actually doing that. And speaking of the TradFi party, there is one token that is joining the TradFi party, and that's of course Ethereum. Eliotrade says there's literally about to be an altcoin on the stock market. You guys realize how insane that is? How can you be more than super short-term bearish? How can you be more than super short-term bearish? I think he meant bullish. Okay, but you know what I'm saying. There's about to be an altcoin on the stock market, and I think that most people have actually written off Ethereum. 63% of people say that ETH won't hit an all-time high before the end of the year. Let's just put that into perspective. ETH USD. Let's quickly just see what it needs to get to. So, the all-time high for ETH is 4,096. 65% of people say that ETH won't hit 4,096 before the end of the year. Now, you know what happens when the market is expecting one thing. Usually the market gets proven wrong in a very hostile way, way. So maybe the masses are right here. I don't believe the masses are right here. I believe that ETH does go through an all-time high. And I'll tell you why I think that ETH actually does go through an all-time high. We're about to get the ETF. When the ETF happens, there's going to be two narratives that are going to be playing through Wall Street. The first narrative that is going to be playing through Wall Street is the technology narrative. Remember, ETH is technology. And when you look at ETH as technology, what you will see is you will see this chart over here. This chart over here shows the transactions in the ETH ecosystem. Now, it's ETH, Optimism, Arbitrum, ZK Sync, etc. You can see that the transactions in the ETH ecosystem are growing exponentially. That's something that Wall Street understands. And when they look at it, they're going to price this as a technological asset. They're going to price this as a technological adoption curve. And generally, when technological adoption curves have exponential growth, the market gives their share price exponential growth. That's the first thing. That's the first narrative. The second narrative that you're going to get is you're going to get the real world asset narrative. And you can already see that just before the launch of the ETH ETF, Goldman Sachs came out and said, we're going to launch 3 tokenization projects by the end of the year. And what they said, if you dig deep into what they said, and I've got the article for you here, and I think it's paragraph 2 or paragraph 3, they said that there is definite feedback. This is something that will actually change the nature of how they can invest. They're not doing it. There's no point in doing it just for the sake of doing it. So what I think we're going to hear now is we're going to hear the technological narrative a lot. We're also going to hear the real world asset narrative a lot. Then we're going to get the ETF inflows. Now, when it comes to ETF inflows, the analysts are predicting that 20 to 25% of the net inflows to Bitcoin are going to flow into Ethereum. That's going to be 3 to 4 billion of net inflows in the first 6 months. That's the expectation that the market is actually setting. But what we also know is that 40% of all Ethereum is staked. That's locked up. That's not moving anywhere. So you're talking about 3 to 4 billion additional buying pressure, but unlike Bitcoin, you got so much of it actually staked. So you got to keep that in perspective when you're talking about ETH. It's a different beast. The one has staking, the one doesn't have staking. The one is technology, the one is a store of value. Wall Street is definitely going to understand the store of the technological narrative in time better than they're going to understand the other narrative. The other narrative that Wall Street definitely understand is Wall Street definitely understand real world assets, and they're after real world assets. And I think what we're going to get now is we're going to get a massive play into tokenization. And as 𝗏𝗏𝗏𝗏 says, and he's quoting Matt Hogan, says, if you want to invest in the growth of tokenization, Ethereum is the picks and shovels play. It underpins all of it. And I think there's a massive narrative here. What you're seeing is a sort of rebirth or the sort of birth of a new asset class. I don't think that we can discount how important real world asset tokenization is going to be. It's going to be the biggest narrative of the year by far. We expect the overall demand for tokenized real world assets to reach up to $30.1 trillion by 2034. This is going to be huge. So real world assets is going to be huge. And it's a narrative that we aren't driving, but TradFi is driving as part of their narrative, as part of their party narrative. They are the ones driving this TradFi narrative. And you can see that it's all growing very, very fast. And you can see that the lion's share of real world assets is actually being done on Ethereum. And I think it goes back to what Matt Hogan says, where he says, if you want to invest in the growth of tokenization, Ethereum is like the picks and shovels of the play. Basically, Ethereum is the real world asset play. So as soon as the institutions talk about real world assets, and I think that will be the primary narrative for Ethereum, the biggest beneficiary of that is going to be Ethereum. And I think I also agree with this tweet over here where it says, no bank wants to be the first because being the first is risky, but no bank wants to be the last either. And so you're going to start a race between the banks to start tokenizing real world assets. You're already starting to see it. You got JP Morgan, you got Goldman Sachs coming out, you got, of course, Larry Fink coming out. And so I think that the biggest narrative of the rest of this year is going to be real world assets. Now, the question is, if we get a real world asset narrative and a real world asset run, what do we invest in? Like, what do you invest in? As I said, I think the most important beneficiary of this is going to be Ethereum. I think no doubt about it. You can see it in the data over here. Ethereum is the biggest beneficiary of all the real world asset transactions. But that's not the only token, and that's not the only beneficiary of this whole real world asset narrative. As you can see, right now, there's about 1.8 billion of tokenized treasuries, and they're talking about 30 trillion. Just think about the size of the growth from 1.8 billion to 30 trillion in less than 9 years. Just think about like how aggressively that growth has to be. You're talking about more than 100x growth in less than 10 years, which is going to be huge. So there are going to be beneficiaries, and I think best that we take a step back and we actually dig into this narrative of real world assets. Now, I've been avoiding the topic for a while because the problem is that real world assets isn't really an exciting narrative from an investment point of view. It's always seen to be like the TradFi narrative, the slow growth narrative. But you can see now that it's a very important narrative to keep your finger on the pulse. And if you play it right, I'll actually show you some of the returns that you can actually get on real world assets. But you got to understand the lay of the land. Okay, you got to understand the lay of the land. So let's talk about the lay of the land. Who are the beneficiaries of the real world asset race? The first one, obviously, is going to be the layer ones. And in terms of the layer ones, of course, Ethereum is going to be the biggest layer one, which is going to benefit from all of this. But that doesn't mean that Ethereum is going to take the whole pie. You're going to get specialized chains. Some of them are going to be specialized by regions, right? Like, for example, if you look at OM Mantra, they were one of our sponsors. They're not a sponsor anymore, but it's important that we talk about them because what they've done is they have focused specifically on the UAE market. Now, why do I say that they're going to be regional champions? Because, hey, the requirements in the EU may be completely different from the requirements in the UAE, and the same with the US. And each specialist player is going to address each one of the requirements. Like, for example, Mantra have got a identity platform, identity layer built into the platform. They've got a trading layer built in. All of these things need to happen for real world assets. And so I don't think there's only going to be one winner. I think there are going to be multiple winners. I'll give you some examples. Ethereum, I think the ultimate winner, but also probably the most expensive. OM, Mantra, one of our ex-sponsors, but good friends of ours. They are absolutely unbelievable. Why? They focused on the UAE specifically. That's where they're starting. They are hard workers. I mean, I read this tweet, which is so cool. Like, it's nice to see people who work hard and actually get rewarded. But they said, this year has been an absolute whirlwind for me, both, and Mantra. At the end of the year, we were struggling to raise dollars and sitting outside the top 800 on CoinGecko. Today, we're on page number 1, and they just keep going up and up and up. So this is definitely one that's been going. If you look at it, if you look at their price performance, I mean, absolutely, absolutely amazing. So for me, this is another one of the L ones. Then you've got AVAX. Now, AVAX is pretty interesting. Why? Because remember that AVAX allows for subnets. So in other words, what is a subnet? It's like a side chain which settles into the main chain. Now, why they could be a beneficiary of some of the real world asset play is because the banks and the service providers may have their own requirements. So JP Morgan may or is building a side chain on AVAX. Why? Because they've got their own requirements, right? And so that's where AVAX might actually come in. So I think in this world, what's going to happen is you're going to get multiple service providers, right? Multiple chains. Then you're going to need a layer which connects all of these chains together. Because really, the user doesn't really care about what chain you're on. That's a crypto bro thing. We don't really care whether, as a user, I want to tokenize assets. I want to use real world asset applications. I couldn't give a shit which chain you build them on. I just want them to work, right? And so for that, what you need is you need oracles to connect all the chains, right? So you can see this is Chainlink, connecting all on-chain markets and liquidity with one open standard, which is what Chainlink call CCIP. Axelar have exactly the same thing. They say, analysts estimate that asset tokenization could reach 16 trillion by 2030. Institutions will use various blockchains for various use cases. Making them interoperable is a practical necessity. And that's what 𝗥𝗓𝗦 does. So what I've said here is, these are the L1s that are going to benefit. These are the bridges or the infrastructure players that are actually going to link all of them together. One of them is Chainlink, market cap $14 billion. One of them is the younger brother, which started off as a Cosmos chain, but is now obviously spreading its wings. But ultimately, you've got Chainlink and 𝗥𝗓𝗦 as these links between the blockchain. Okay, so now you've got the L1s, and then you've got all the links between the L1s. And then you've got all the different applications that are in real world assets. Now, I think the most prominent one in the crypto world is ONDO. Now, $10 billion fully diluted valuation. That's not something that usually I would look at, to be honest. But, I mean, you got to give it to ONDO. Number one, they have 8x, or they went over 10x since the beginning of the cycle. In terms of total value locked, 550 million. What do they actually do? Well, they are tokenizing real world assets on chain. So what have they done? They've tokenized real world treasuries on chain. So you can actually go and buy real world treasury yields on chain, getting the APYs that you get, and you do it on a blockchain. So, I mean, look, ONDO is the big daddy. Are you going to 10x your money on ONDO? No, you're not going to 10x your money on ONDO. Forget about it. Forget about it. It's not going to happen. Not going to happen soon, but it will happen eventually. Also, my issue with ONDO is that it's a high FDV, low float market cap. So for me, it will move because the real world asset narrative has moved, and it'll move because the tokens are quite highly controlled. But I don't think that I want to be buying a $10 billion fully diluted valuation asset. That's just me. I don't know. That's just me. Then you've got Pendle. Now, why is Pendle so important? You got to understand what Pendle actually does. Pendle allows you to separate the yield from the principal. So in other words, like when you have an investment and you're getting a yield, Pendle allows you to separate the yield from the principal. I want to see if I can find you something here on Pendle. I think I had something here. Here we go. So what they do is they allow you to separate the yield from the principal, and that's an important part of interest rate markets, which is an important part of real world assets. And so here's another real world asset play on the market. Another marketplace, and this one specifically is a marketplace which is getting its traction on real world asset loans, is Centrifuge. So if you look at Centrifuge, I think I've got something to show you guys here on Centrifuge. How it works: you can borrow or you can lend your real world asset. You can finance your real world assets by using DeFi, and you can lend against your assets by using DeFi. Now, again, Centrifuge has got a lot of TVL. They've got good traction. They've got $497 million of total TVL. So this is another one that's actually getting traction out there. Again, fully diluted valuation, $285 million. That's more palatable for me, right? That's more palatable for me. Then you've got the marketplaces. So you've got Maple and you've got Clearpool. Clearpool is a marketplace for real world asset loans. You can see it over here. Again, huge growth on Clearpool. It's not a big protocol. It's not a big protocol, but in terms of users, see, it's quite a small protocol, but in terms of users, it's quite a good one. Then, as I said to you, they're going to be regional champions. And one of these regional champions, I'm going to highlight it here in yellow, is one of our sponsors. Again, I'm talking about them not because they're a sponsor, but because they really are a good real world asset player. And that one is Swarm Markets. Now, here again, these are guys that have focused specifically on the EU market. So like I said, that OM or Mantra focused on the UAE. These guys, they focused on the EU market. They do everything, but they're much more focused on the EU market. And they are a platform for really tokenizing any kind of real world asset in a compliant way, in a very, very, very compliant way. So that is what the real world asset narrative looks like. We'll drop the spreadsheet below so that you guys have got the spreadsheet. But I think it's super important that you understand the terrain. You're going to have the layer ones, you're going to have the bridges, and then you're going to have the application layer. And just like we invest in the infrastructure, the layer one, and then the applications, that's how your real world asset strategy has got to be. And obviously we'll keep covering it with you guys as we go along. So that's real world assets. Now, before we go today, we want to quickly just talk about our political corner. I found this absolutely crazy. The fact that Biden hasn't had a call or a meeting with Powell since 2022. I don't know. I mean, that sounds like, Josh, is that not like weird? Like, President of the US and the Fed hasn't had a call. I mean, unless he's like sending each other like notes, like they were in class. I don't know how they communicate. Anyway, on the political corner, Trump again very much ahead. I don't know if you guys saw, but he is speaking in Nashville. Obviously, we'll be there. So Trump speaking in Nashville. Now, someone asks, why is Trump doing this? And I love this tweet. This tweet here says, because there's more Bitcoin holders and dog owners in the US. I've yet to see a dog conference that's bigger. And that's true. Trump wants the votes, and he's going to play into the votes, and he's going to make promises. And one thing about Trump is he actually keeps his promises. He's one of the presidents that actually has kept his promises. So I guess he's making all the right moves. We did have the president of the CFTC, the chairman of the CFTC, come out yesterday and say that 70 to 80% of tokens in the market are actually not securities. So now there's this massive heat up between whether they're securities or not securities. And interestingly enough, there was a meeting, a roundtable meeting yesterday held with a lot of Democrats, and apparently the sentiment that came out was a chunk of the meeting consisted of industry describing their terrible experiences with the SEC, and ___ seemed genuinely surprised by our description of the SEC's action. So it's almost like the Democrats are saying, hold on, we don't know. You didn't know. They don't know that they're so hostile to crypto. I mean, come on, you do know this. I was told that Mark Cuban gave attendees permission to quote him as saying, at the end of the meeting, Biden should fire Gary Gensler. So that's the sentiment out there. So that's the sentiment. Anyway, I wanted to keep it short and sweet because there's not much movement on the market. Let's quickly just look at the market one last time. Slight move in altcoins. Bitcoin, I think, still attacking that level, 58,468. So no big shakes on Bitcoin. We'll obviously keep watching it. If you want more updates, follow me on Twitter. Otherwise, I'll see you guys again tomorrow. Until then, trade well, my friends.